Welcome back to the Fast Money Halftime Report. It is the unstoppable silver trade, at least so far, briefly flirting with the $50 mark earlier in the day. Heading into Bernanke's big speech, is there anything that can dent this precious metal? Joining us now is Peter Schiff of Euro Pacific Capital. Peter, great to have you with us. I want to get your take on your feeling about silver relative to gold. You know, a lot of people out there say that silver is more relatively undervalued than gold. What's your take?
Well, I don't know. I think if you look at the amount of silver in the earth versus gold, I think the ratio there is about 17 to 1. I think that gold is going to, or silver rather, is going to continue to gain on gold as this bull market continues to unfold. I think we have many, many years left to go. I ultimately think that you'll see a gold-silver ratio below 20. I think right now it's more about 35. But when this bull market started, I think the ratio was around 60. You know, I've been buying silver now for over 10 years. When I started buying it, it was around $5 an ounce. At the time, gold was around $250, $260. Both the precious metals have gone up, but silver has gone up more. And, you know, if I'm right, if this bull market continues, I expect silver to keep outperforming. Is
it safe to say that within your portfolio, Peter, you've been shifting more towards silver and silver miners away from gold, even though you have both?
No, I haven't been, although you can certainly look. My silver stocks have outperformed my gold stocks substantially recently, so that's changed my weighting. I don't know exactly what it is, and certainly, you know, at my metals company, I have been recommending that people have 2/3 gold, 1/3 silver for a long time. Obviously, people that did that, right now they might have 50-50 because silver has gained on gold, even though both metals have risen. And the reason that's happening is because Ben Bernanke is debasing the value of the dollar. In fact, central banks all around the world are too loose. They're creating too much money. And so people around the world are buying gold and silver as a store of value. And I think that will continue.
Hey, Peter, based on this accelerated move, though, I mean, silver just this year alone has just been flying off to the races. Have you trimmed it all in there, or do you just continue to invest more and deeper into the silver?
No, I haven't sold an ounce of silver since I started buying it. But, yeah, I am telling people now that they might want to buy a little bit more gold and less silver and wait for some kind of pullback in this ratio, which I think is going to come. I think you're going to see either a pullback in the metals where silver falls more than gold, or maybe you'll even see a rally where you have a bigger rally in gold and silver goes sideways. You know, it's interesting. You know, there's a lot of headlines on CNBC, a lot of talk about the record high oil prices. You know, the real story should be oil is at a record low. Gasoline has never been this cheap. You know, the lowest gasoline got up until this year was in 1931. In the Great Depression, gasoline got to 17 cents a gallon. But for most of the 50 years between 1920 and 1970, gasoline was generally between 20 and 30 cents a gallon. It wasn't until the 1970s, when we left the gold standard, that gas prices really started to rise. But today, right now, you can buy a gallon of gas for less than 1 dime, less than 10 cents. The thing is, you need a real dime. You need a dime that was minted before 1965.
Right.
So in terms of real constitutional money, silver that was coined by the U.S. Mint, gasoline has never been this cheap. It's only when you have fiat money, the paper money that the Fed is running off the printing presses, that's the only reason that prices are rising, because our money is losing value.
I have a Suburban. Where do I get one of those dimes?
I got bags of them, but you know, you could buy them from Europac Precious Metals. See, the problem is, though, now those dimes cost $5 a piece. But if you had those dimes, if you can go through your old change drawers, if you can find a dime that you had in 1964, you can take that dime and you can buy a gallon of gasoline.
Right.
That proves that gasoline is not getting more expensive. Our money is losing value. There is a connection between the rising price of food, the rising price of gas, and all the money the Fed is printing. This is a consequence because the government is not raising taxes, they're creating inflation.
So, Peter, bring on the silver Prius.
Peter, it's always good to speak with you. Your website address is behind you, so.
Yeah. You guys own any silver yet? Any gold?
Gotta leave it there, Peter. Let's call the close. Go around the horn. Steve Grosso, what do you say?
I say a little higher until Bernanke speaks.
Zach.
It's a middling day, and I expect it to end middlingly.
Brian Kelly.
I think this market goes higher.
Pete.
I expect